The credit card secret. I'm going to tell you something that might make you physically sick to your stomach. Something that happened to me 3 months ago that completely changed the way I look at the plastic card sitting in my wallet right now. And if you've ever felt like the banks were playing a game you didn't fully understand, if you've ever wondered why that minimum payment option exists, or why they're so eager to increase your limit without you even asking, then what I'm about to share with you is going to hit you like a freight train. Because I used to work inside one of the largest banks in America. I sat in meetings where we discussed you. We talked about your spending habits, your psychological triggers, your weaknesses, and the things I learned in those conference rooms, the strategies we designed specifically to keep you paying, keep you borrowing, keep you trapped in a cycle you don't even realize you're in. These things kept me up at night. I eventually quit. I couldn't do it anymore. But before I walk you through exactly what they don't want you to know, I need you to understand something crucial. This isn't a conspiracy theory. This isn't me being dramatic. This is documented strategy, taught in financial institutions, refined over decades, and it's working on you right now today as you watch this. Your credit card company knows more about you than your closest friends do. They know when you're stressed, when you're happy, when you're vulnerable. And they use that information in ways that would genuinely shock you. So here's what's going to happen. I'm going to take you inside the machine. I'm going to show you the exact tactics, the psychological warfare, the mathematical traps that are designed to extract maximum profit from your life. And by the end of this, you're going to look at your credit card completely differently. You might even feel angry, you might feel manipulated, and you should, because you have been. But before we go deeper, I need to ask you something. If this information matters to you, if you want to protect yourself and the people you care about from these predatory practices, hit that like button right now. Because the algorithm needs to know that this kind of truth matters, that real financial education matters, and that people are tired of being treated like profit centers instead of human beings. And subscribe to this channel, because I'm going to keep pulling back the curtain on an industry that thrives on your ignorance. They want you confused. They want you overwhelmed. They want you to just keep swiping and paying and never asking questions. So let's start asking questions. Let's start with the most obvious one. Why does your credit card company make it so incredibly easy to pay only the minimum amount due each month? You get your statement, and right there in bold letters, it says minimum payment due, and it's always some small, manageable number. Maybe $35, maybe $50. Feels reasonable, doesn't it? Feels like you're being responsible by at least paying that. Here's what they're not telling you. That minimum payment is mathematically designed to maximize the amount of interest you pay over the longest possible time period. It's not designed to help you pay off your debt. It's designed to keep you in debt for as long as humanly possible while extracting the maximum amount of money from you in interest charges. Let me give you a real example. If you have a $5,000 balance on a card with 18% APR, which is actually below average now, and you only pay the minimum payment each month, it will take you approximately 23 years to pay off that card. 23 years. And you'll pay over $6,000 in interest alone. You'll pay more in interest than the original amount you borrowed. Think about that for a second. You'll work for 23 years to pay back money you spent in a few months, and here's the truly insidious part. The credit card company knows that most people who pay the minimum don't actually intend to carry that balance for 23 years. They tell themselves it's temporary. They tell themselves they'll pay more next month when things are better. But the credit card company has data on millions of customers, and they know that next month something else will come up. An unexpected expense, a birthday, a car repair, a moment of stress where you swipe the card again, and the balance grows instead of shrinks. This is what we called the perpetual debtor in those meetings I mentioned, the ideal customer. Someone who never defaults, never misses a payment, but also never pays off the balance. Someone who just keeps feeding the machine month after month, year after year. And everything about how credit cards are designed, from the minimum payment to the rewards programs, to the way your statement is formatted, is built to create and maintain perpetual debtors. Now you might be thinking, but I pay my balance in full every month. This doesn't apply to me. And if you do genuinely consistently pay your balance in full every single month, then congratulations. You're in the minority. You're what the industry calls a deadbeat, and yes, that's actually the term they use. because you're not making them money. But here's the thing. The entire system is designed to convert you eventually into a profitable customer, and they're very, very good at it. Let me explain how they do it. It starts with the credit limit. Have you ever noticed how your credit card company periodically increases your limit without you asking for it? You get a notification. Great news! Your credit limit has been increased from $5,000 to $8,000. They frame it as a reward. They make it sound like you've accomplished something, like they trust you, like you've earned this privilege. But here's what's really happening. They've analyzed your spending patterns, your income, your payment history, and they've determined that you can handle more debt. Not that you should take on more debt, that you can handle it. Meaning, you can afford to pay interest on a larger balance without defaulting. The increased limit serves multiple purposes. First, it makes you feel wealthy, capable, secure. You have access to $8,000 whenever you need it. That feeling of financial cushion makes you more likely to spend. Second, it gives you more rope. If you're someone who occasionally carries a balance, a higher limit means you can accumulate more debt before you hit that uncomfortable moment of being declined or reaching your max. And third, it protects their investment. If you're regularly spending close to your limit, you're considered high risk. You might default. But if you're only using 30 or 40% of your available credit, you look responsible, safe, profitable. So they increase your limit to keep you in that sweet spot where you're spending and borrowing but not drowning. Yet. Here's the psychological trap within the trap. Studies show that people spend more when they have higher credit limits, even if they have no intention of carrying a balance. It's called the credit limit effect. The higher your limit, the more you perceive yourself as financially secure, and the more you're willing to spend in the moment. The credit card company knows this. They've studied this, they've weaponized this, and it works. On you, on me, on everyone. Now let's talk about rewards programs because this is where people really believe they're winning. I get 2% cash back on everything. I get travel points. I'm making money off the credit card company. And I get it. I understand why it feels that way. But let me ask you something. Who do you think is funding those rewards? Do you think the credit card company is just generously giving away money because they like you? Every single dollar they give you in rewards comes from somewhere. It comes from interest charges paid by other customers. It comes from merchant fees, and most importantly, it comes from you, because the existence of rewards programs makes you spend more. Research shows that people using rewards credit cards spend 12 to 18% more than they would if they were using cash or debit. 12 to 18%. So yes, you might be getting 2% back, but you're spending 15% more than you would have otherwise. You're losing money while feeling like you're winning. This is psychological manipulation at its finest. They give you a small, visible reward to obscure a larger, invisible cost. And it works because humans are wired to respond to immediate rewards more strongly than abstract long-term costs. You see that cashback number on your statement, and you feel smart, savvy, like you're gaming the system. But the system was designed to make you feel exactly that way, because that feeling keeps you using the card, keeps you spending, keeps you feeding the machine. And here's something even more disturbing. Some rewards programs are specifically structured to encourage behavior that leads to debt. Pay attention to the categories that give you higher rewards. Often it's dining, entertainment, travel, discretionary spending, fun spending, emotional spending. They're not giving you extra points for buying groceries or paying your electric bill. They're giving you extra points for the kinds of purchases that are impulse-driven, socially motivated, tied to experiences and feelings rather than necessities. Why? Because those are the purchases you're most likely to justify, most likely to repeat, and most likely to carry a balance on if you overspend. They're training you to associate pleasure with swiping the card. Every time you get points for a nice dinner, every time you redeem rewards for a flight, you're reinforcing the neural pathway that connects credit card use with positive experiences. And over time, that association becomes automatic. You don't even think about it anymore. You just swipe. But here's where it gets really dark. Everything I've told you so far assumes you're aware you're in debt, aware you're paying interest, aware of what's happening. But many people aren't. They've normalized it. They've accepted it as just the way things are. and the credit card companies work very hard to keep it that way. Let me show you how. Look at your credit card statement right now if you have one available. Look at how it's formatted. Notice anything? It's designed to be confusing. The important information is buried. The minimum payment is prominent. The total interest paid this year is in small print. The actual APR calculation is explained in language that requires a finance degree to understand. This isn't an accident. It's not incompetence. It's strategy. There are people, designers, and behavioral psychologists who are paid six-figure salaries to make your credit card statement just confusing enough that you don't fully grasp what's happening to your money. They test different formats. They track which layouts result in higher payment rates, lower default rates, and most importantly, longer debt duration. Your confusion is profitable. Your lack of understanding is by design. And when you call customer service with questions, the representatives are trained to redirect you, to focus on your minimum payment, to congratulate you on your account standing, to offer you promotional balance transfers or credit limit increases. Anything except clearly explaining how much money you're losing to interest and how long it will actually take to pay off your debt if you continue on your current path. Now, let me introduce you to a practice that very few people know about, but that costs consumers billions of dollars every year. It's called trailing interest, or residual interest. Here's how it works. Let's say you carry a balance of $3,000 on your credit card for several months, and then one month you decide to pay it off completely. You pay the full balance shown on your statement. You think you're done. You think you're free. But then next month, you get a new statement and there's an interest charge of $40 or $50. How is that possible? You paid the full balance. This is trailing interest. Credit cards calculate interest daily based on your average daily balance, but they bill you monthly. So even though you paid your statement balance in full, interest was accruing every single day until the payment was processed. And that interest wasn't reflected on the statement you paid. So now you owe interest on money you've already paid back. And here's the truly infuriating part. If you don't pay that trailing interest in full the next month, it gets added to your balance, and now you're paying interest on the interest. You thought you escaped, but they pulled you back in with a charge you didn't even know was coming. Most people, when this happens, don't understand it. They feel confused, maybe even suspicious that the credit card company made an error. But it's not an error, it's built into the system. It's in the fine print you didn't read when you signed up. And it's completely legal. This is one of dozens of small traps embedded in the credit card system, each one designed to extract just a little more money, to extend your debt just a little longer, to make escape just a little harder. Let's talk about another one. Universal default. This is a practice where your credit card company can raise your interest rate, not because of anything you did with their card, but because of something you did with a completely different financial product. Let's say you're late on a car payment, or you miss a payment on a different credit card, or your credit score drops for any reason. Even though you've been perfect with this particular credit card, making every payment on time, staying under your limit, doing everything right, they can raise your interest rate, sometimes dramatically, from 15% to 29%. Because you represent higher risk now, even though that risk has nothing to do with how you've treated them. You might think, well, I'll just pay off the card and close it if they do that. But here's the catch. Closing a credit card, especially one you've had for a long time, can hurt your credit score. It affects your credit utilization ratio and your average account age. So now you're trapped. If you keep the card open with the higher rate, they extract more money from you. If you close it, you damage your credit score, which can cost you money in other ways. Higher rates on auto loans, mortgages, even insurance premiums in some states. They've built a system where every door leads back to them getting paid. Now, are you starting to feel it? That creeping sense that maybe you're not as in control as you thought you were? That maybe the game was rigged from the start? Good. Because that feeling, that discomfort, that's the first step toward breaking free. But we're not done yet. Not even close. Because everything I've told you so far is just about the obvious financial mechanics. The interest rates, the fees, the calculations. But the real manipulation, the truly insidious stuff, is psychological. It's about how they get inside your head and make you want to use the card even when you know you shouldn't. Let me tell you about something we called strategic timing. Credit card companies track your spending patterns with incredible precision. They know when you typically make purchases. They know when you're most vulnerable to spending, and they time their communications accordingly. Notice how you often get promotional offers or credit limit increase notifications right before major spending periods, right before the holidays, right before summer vacation season, right before back-to-school season. This isn't coincidence. They're putting the tool in your hand right when you're most likely to use it. They're lowering your psychological barriers right when your spending impulses are highest. It's like offering an alcoholic a drink right after they've had a stressful day at work. They know you're vulnerable, and they're exploiting it. But it goes even deeper than that. Credit card companies purchase data from data brokers about your life events. They know when you've gotten married, when you've had a baby, when you've bought a house, when you've changed jobs. And they adjust their approach based on these life events. New parents are targeted with higher credit limits and 0% promotional rates because they know you're about to spend money on baby supplies, nursery furniture. All the things new parents buy. People who just bought a house are targeted because they know you're about to spend money on furniture, renovations, all the things new homeowners buy. They're not offering you these promotions to help you. They're offering them because they know you're about to spend, and they want to make sure you spend using their card, and ideally, that you spend more than you can pay back immediately. Now let me tell you about the most disturbing thing I learned during my time in banking. Something that genuinely made me question the ethics of the entire industry. Credit card companies specifically target people who are financially stressed, people who are struggling, people who are vulnerable, and they don't target them to help. They target them because these people are profitable. Here's how it works. When someone is financially stressed, when they're living paycheck to paycheck, when they have unexpected expenses and no emergency fund, they're more likely to carry a balance. They have no choice. They need the credit card to survive. And once they're carrying a balance, once they're paying interest, they become incredibly valuable customers. Because they're trapped. They can't pay off the balance because they don't have extra money. But they keep making minimum payments because they're responsible. They don't want to default. They don't want to ruin their credit. So they feed the machine month after month, year after year, paying interest that compounds and grows and never seems to shrink the principal. The credit card companies have algorithms that identify these vulnerable customers. They look for patterns, frequent minimum payments, increasing balances, utilization rates above 50%, and when they identify someone who fits this profile, they increase their credit limit. They offer balance transfers. They send promotional offers, not to help the person get out of debt, to help the person take on more debt, because more debt means more interest, and more interest means more profit. I sat in meetings where executives talked about these customers like they were assets to be harvested. There was no empathy, no acknowledgement that these were human beings struggling to survive. Just calculations about lifetime value and profit margins and optimal debt-to-income ratios. And the worst part? This is entirely legal. There are regulations around disclosure and maximum interest rates in some states, but there's nothing illegal about targeting financially vulnerable people and designing products specifically to keep them in debt. Now you might be wondering, if it's this bad, why don't more people know about it? Why isn't this bigger news? And that's a great question. The answer is that the credit card industry spends enormous amounts of money on marketing, lobbying, and PR to control the narrative. They fund financial literacy programs that teach you how to use credit responsibly, but never question whether you should be using credit at all. They sponsor news segments about maximizing your rewards, but never discuss the psychological manipulation behind rewards programs. They donate to politicians who block regulation and protect their interests. And they've successfully shifted the blame onto consumers. If you're in credit card debt, the dominant cultural narrative is that it's your fault. You spent irresponsibly. You didn't budget properly. You need to be more disciplined. And sure, personal responsibility matters. Of course it does. But what nobody talks about is that you're being manipulated by a multi-billion-dollar industry that has spent decades perfecting the art of getting you to spend money you don't have. You're fighting against psychological tactics developed by experts, implemented by algorithms, refined through data analysis on millions of people. It's not a fair fight. It never was. Imagine if every time you tried to quit smoking, cigarette companies sent you personalized offers for free cigarettes delivered to your door, timed to arrive exactly when you were most stressed. That would be outrageous, right? But that's essentially what credit card companies do, and we just accept it as normal. So let's talk about what you can do about this. How do you fight back? How do you protect yourself? First, understand that the credit card is not your friend. It's not a tool for building wealth. It's not a sign of financial success. It's a product designed to extract money from you, and every feature, every benefit, every convenience is secondary to that primary purpose. Once you truly internalize this, your relationship with credit cards changes. Second, if you're carrying a balance, understand that the minimum payment is your enemy. It's designed to keep you in debt as long as possible. If you can possibly afford to pay more than the minimum, do it. Even an extra $20 or $30 a month can cut years off your debt and save you thousands in interest. And if you can't afford to pay more than the minimum, that's a sign that you need to stop using the card immediately and figure out a different solution. Third, if you're using a credit card for rewards, track your spending carefully. Calculate whether you're actually coming out ahead or whether the rewards are costing you more than they're worth. Most people have never actually done this math, and when they do, they're shocked to discover they're losing money. Fourth, request your credit report and review every single account. Understand exactly what you owe, what your interest rates are, what your credit utilization is. Knowledge is power. The credit card companies thrive on your ignorance. Don't give them that advantage. And fifth, consider whether you need a credit card at all. I know that sounds extreme. Credit cards are normalized in our society to the point where not having one seems irresponsible or impractical. But I want you to seriously consider it. What do you actually need a credit card for that you couldn't accomplish with a debit card, cash, or other payment methods? Building credit is the answer most people give. But here's the uncomfortable truth. You're paying to build credit so that you can qualify for loans so that you can go into more debt. It's circular. You're feeding a system that exists to profit from you. Now, I'm not going to tell you that you should definitely cancel all your credit cards. That's a personal decision that depends on your individual situation. Some people can use credit cards responsibly and come out ahead. But I am going to tell you to question the assumption that you need them. Question the assumption that they're helping you. Question everything you've been told about credit cards, because most of it comes from the industry itself or from sources funded by the industry. Let me share a personal story. After I left banking, I carried credit card debt for 2 years. Not because I was financially irresponsible, but because I had fallen into the exact traps I've been describing. I was making minimum payments, telling myself I'd pay more next month, using promotional balance transfers to shuffle debt around without actually eliminating it. I knew how the system worked. I had literally helped design parts of it, and I still got caught. That's how powerful the psychological manipulation is. What finally broke me free was sitting down and calculating exactly how much money I was paying in interest every single year. It was over $2,000. $2,000 that I was giving to a bank for absolutely nothing in return. Not for a product, not for a service, just for the privilege of having borrowed money in the past. $2,000 that could have gone towards savings, investments, experiences, anything except making a bank richer. That realization made me angry. Not at myself, but at a system that had been designed to extract that money from me, while making me feel like it was my fault, like I was irresponsible, like I was failing. So I made a plan. I stopped using the cards entirely. I called the companies and asked for lower interest rates, and when they refused, I transferred balances to 0% promotional cards and set up automatic payments to pay them off before the promotional period ended. It took 18 months of focused effort and sacrifice, but I paid off every penny. And when I did, when I made that final payment and saw my balance hit zero, I felt a freedom I hadn't experienced in years. I realized how much mental space that debt had been occupying, how much stress it had been causing, how much it had been affecting my decisions and my sense of security. And here's the thing nobody tells you. Getting out of credit card debt isn't just about the money. It's about reclaiming your agency. It's about refusing to participate in a system that treats you as a profit center instead of a human being. It's about breaking the psychological chains that keep you spending, borrowing, paying, and never quite getting ahead. Now, I know some of you are watching this and thinking, this is too extreme. Credit cards aren't that bad. You're being dramatic. And if that's where you are, that's fine. I'm not trying to scare you or convert you to some anti-credit crusade. I'm just trying to give you information that the industry doesn't want you to have. Information that allows you to make informed decisions instead of operating on autopilot. But I also know that some of you are watching this and feeling seen for the first time. You've been struggling with credit card debt, feeling ashamed, feeling like you're the only one who can't seem to get ahead. And now you're realizing that maybe it's not entirely your fault. Maybe you've been playing a game with rigged rules. Maybe the shame you've been carrying isn't deserved. If that's you, I want you to know something important. You can get out. It's possible, it's hard, and it requires sacrifice, and it takes time, but it's possible. And the first step is understanding what you're fighting against. The second step is making a plan. And the third step is executing that plan with relentless consistency, no matter how long it takes. Let me give you some specific tactical advice that the credit card companies definitely don't want you to know. If you're carrying balances on multiple cards, the conventional wisdom is to pay off the highest interest rate card first. This is mathematically correct. It will save you the most money in interest. But psychologically, it often doesn't work. Here's what does work for many people. The debt snowball method. Pay off your smallest balance first, regardless of interest rate. Yes, you might pay slightly more in interest overall, but the psychological win of completely eliminating a debt, of seeing a balance hit zero, provides motivation that keeps you going. Then you take the payment you were making on that card and add it to the payment on your next smallest card. And you keep rolling that snowball, getting momentum, seeing progress, staying motivated. The credit card companies hate this method because it actually works for real humans with real psychology, not for theoretical rational actors who exist only in economic models. Another tactic, call your credit card company and ask for a lower interest rate. Right now. Today. Just call them, tell them you've been a good customer and ask if they can lower your rate. You'd be surprised how often this works. They have retention departments whose entire job is to keep you as a customer, and sometimes all it takes is asking. If the first representative says no, ask to speak to a supervisor. If the supervisor says no, call back the next day and try again with a different representative. Be persistent. Every percentage point you can shave off your interest rate saves you money and gets you out of debt faster. Here's another one that credit card companies really don't want you to know. If you're struggling to make payments, if you're on the verge of defaulting, call them before you miss a payment and ask about hardship programs. Most major credit card companies have programs for customers experiencing financial difficulty. They might lower your interest rate temporarily, waive fees, create a modified payment plan, or even settle for less than you owe. But they don't advertise these programs. You have to ask. And you have to ask before you default, because once you've already missed payments, you lose your negotiating leverage. Now let's talk about something that might make you uncomfortable. The social aspect of credit card debt. We live in a culture that equates spending with success, that treats consumption as a form of identity, that makes you feel like you're falling behind if you're not buying what everyone else is buying. And credit cards make it possible to participate in that culture, even when you can't actually afford it. Think about how many times you've used a credit card to keep up appearances, to go out to dinner with friends when you couldn't really afford it, to buy clothes you didn't need because there was a sale, to take a vacation because everyone on social media seemed to be traveling, to buy gifts at holidays that exceeded your budget because you didn't want to seem cheap. The credit card makes all of that possible. It allows you to maintain a lifestyle that your income doesn't support. And in the short term, that feels good. It feels like you're succeeding, like you're living well, like you're not falling behind. But in the long term, it's killing you. Every time you swipe that card to keep up appearances, you're trading future financial security for present social comfort. You're choosing short-term belonging over long-term freedom, and the credit card companies know this. They know that social pressure is one of the most powerful forces driving consumer spending. So, they make their cards beautiful. They make them feel prestigious. They create different tiers, platinum and black cards that signal status. They partner with brands and celebrities to make their cards seem cool, desirable, associated with success. It's all designed to make you feel like using the card is a sign that you've made it, that you're doing well, that you're successful. But here's the truth they don't want you to see. The people who are actually wealthy, who have genuine financial security, often don't use credit the way you do. They use credit as a tool for leverage, for cash flow management, for rewards on spending they were already going to do. They don't use credit to maintain a lifestyle they can't afford. They don't carry balances. They don't pay interest. They use the credit card industry's own tactics against them. And what about the ultra-wealthy? They often don't use credit cards at all for personal spending. They use debit, cash, or direct payment from investment accounts. Because they understand something fundamental. Debt is a tool for building wealth when used strategically, but consumer debt, credit card debt, is a trap. It's a tool for extracting wealth. Now I want to address something that some of you might be thinking. If credit cards are so bad, why are they legal? Why doesn't the government regulate them more? Great question. The answer is complicated and involves lobbying, campaign contributions, regulatory capture, and the way that consumer debt has become essential to the American economy. But the simple version is this. Credit card companies are extremely profitable, they're politically powerful, and they've successfully convinced lawmakers that regulation would harm consumers by restricting access to credit. The narrative they've sold is that credit cards represent freedom and opportunity, and that any attempt to limit them is paternalistic and anti-consumer. It's brilliant marketing. They've made the weapon seem like a tool for empowerment. And to be fair, credit cards can be useful for certain things. Emergency funds when you have no other option. Building credit history for major purchases like a home. Fraud protection on online purchases. Travel benefits and insurance. I'm not going to pretend these benefits don't exist, but what I am going to say is that for most people, the costs far outweigh the benefits. The average American household with credit card debt carries over $7,000 in balances. That's over $1,000 a year in interest at current average rates. That's money that could be going toward retirement savings, emergency funds, education, anything except making banks richer. So here's what I want you to take away from this. You are not broken. You are not financially irresponsible. You are not uniquely bad at money. You are operating in a system that was designed to make you fail. A system that profits from your failure. A system that has spent billions of dollars figuring out how to get inside your head and make you spend money you don't have. Understanding that is the first step toward breaking free. The second step is deciding that you're done, that you're not going to play their game anymore. That you're going to take control of your financial life and stop letting a piece of plastic dictate your future. The third step is making a plan. And the fourth step is executing that plan with relentless, aggressive consistency until you've eliminated every penny of credit card debt from your life. It won't be easy. It might take years. You might have to sacrifice things you want, delay gratification, say no to experiences that everyone else seems to be having. But here's what I can promise you. The freedom on the other side is worth it. The feeling of knowing you don't owe anyone anything, that your income is yours, that you're not paying interest to make banks richer, that you've broken the chains they spent so much money forging. That feeling is worth every sacrifice you make to get there. Now let me tell you something that might surprise you. After I paid off my credit card debt, I kept one card. Just one. And I use it for specific purposes. Online purchases where I want fraud protection, travel bookings where I get insurance benefits, and monthly subscriptions that I carefully track. But I pay the balance in full every single month, not most months, every month, without exception, because I know what happens if I slip, if I justify carrying a balance just this once, if I tell myself I'll pay more next month. I know how the trap works because I've been in it, and I'm never going back. And you don't have to either. You can make different choices. You can break free. You can refuse to participate in a system that treats you like a profit center. But it starts with awareness. It starts with understanding what you're up against. It starts with knowing what the banks don't want you to know. And now you know. Now you've seen behind the curtain. Now you understand the tactics, the psychology, the mathematical traps. the ways they've designed every aspect of the credit card system to extract maximum profit from your life. So what are you going to do with this information? Are you going to keep operating on autopilot, letting the system run you, or are you going to take control? The choice is yours. But before you make that choice, let me share one more thing. One more piece of information that I think ties everything together. The credit card industry exists because of one fundamental human weakness: our inability to accurately predict our future financial behavior. When you swipe a credit card, you're borrowing against your future self. You're making a bet that future you will have the money to pay for what present you wants to buy. And sometimes that bet pays off. Future you gets a raise or a bonus, and paying off the purchase is easy. But often, that bet fails. Future you has unexpected expenses. Future you makes less money than you expected. Future you is just as strapped as present you, and now you're both in debt together. The credit card companies know this. They have decades of data showing that humans are optimistic about the future and tend to overestimate our ability to pay back debt. They've built an entire industry on that cognitive bias. Every time you swipe the card, every time you carry a balance, every time you make a minimum payment while telling yourself you'll pay more next month, you're falling victim to that bias. You're betting against yourself and losing. So here's what I want you to do. The next time you're about to use a credit card, especially for something discretionary, something you want but don't need, pause, take a moment, and imagine your future self receiving the bill for this purchase. Imagine future you looking at the balance, looking at the interest charges, deciding whether to pay it off or carry the balance one more month. How does future you feel about present you right now? Are you grateful that present you made this purchase? Or are you resentful that present you just made your life harder? This simple mental exercise can break the spell. It can create a moment of space between the impulse and the action. And in that space, you can make a different choice. You can choose not to bet against yourself. You can choose not to trade future financial security for present gratification. You can choose to break the cycle. Now, I know some of you are sitting there thinking, this is great, but I need practical steps. What do I actually do starting tomorrow? Okay, here's your action plan. Tonight, before you go to bed, find all your credit card statements. Every single one. Look at the total amount you owe. Look at the interest rates. Calculate how much interest you're paying every single month. Write it down. Make it real. Make it concrete. Don't estimate. Know exactly what it's costing you. Tomorrow, make a list of your debts from smallest to largest. Then commit to paying off the smallest one first, not next month. Not when you get your tax refund. Now, cut every unnecessary expense. Stop eating out. Cancel the subscriptions you haven't touched in months. Sell the things you bought with that debt that are just gathering dust in your closet. Take that cash and throw it at that smallest debt. Attack it with violence, with ferocity. Don't give your habits a break. Once that smallest debt disappears, take what you were paying on it and roll it over to the next one, and then the next. Create a snowball of payments that crushes everything in its path. This isn't about math, it's about psychology. You need wins. You need to see a zero on a statement to believe that a zero balance on all of them is possible. Trust me, that first win changes the chemistry of your brain. It proves to you that you are capable of winning. This process is going to be difficult. I'm not going to lie to you and tell you it's a bed of roses. There will be days when you want to quit. There will be moments when you want to swipe that card just one last time, because you're tired, because you've had a bad day, because you feel you deserve a break, a treat. That is the moment of truth. That is where the battle is won or lost. That is the climax of your personal story. The banks are betting that you will give up. They are betting that you will cave. Every ad, every promotional email, every easy payment button is designed to make you fall in that moment of weakness. But you have to look at that balance, look at that interest rate, and remember who you are fighting for. You aren't fighting for the bank. You are fighting for yourself. You are waging a war for your own dignity and your future. I remember the day I made the final payment. It wasn't a party. It was quiet. I was sitting at my desk. I pressed submit, and the screen updated to show a zero balance. 0.0, just 2 zeros and a decimal point. But those were the heaviest and lightest zeros I had ever seen. I felt like I could breathe again. I felt like a weight I had been carrying for a decade had been lifted off my shoulders. I walked outside, and the air smelled different. The colors looked brighter. I realized that I wasn't just paying money. I was reclaiming my life. That moment is waiting for you. That feeling is real. It isn't a fantasy. It is a tangible, physical, and emotional reality that is on the other side of this hard work. That freedom is what you deserve. But let's be clear, this isn't just about the money. Money is just paper and numbers. This is about your relationship with yourself. Every time you swipe that card for something you can't pay for, you are telling yourself, I'm not enough to earn this right now. I have to steal from my future to have it today. That is a lie. You are enough. You have the ability to earn, to save, to build. The credit card is a crutch that prevents you from walking on your own 2 feet. When you break that crutch, you wobble a little at first. It feels scary to pay cash or use a debit card. It feels poor not to have the latest gadget immediately. But that poverty is actually strength. It is the power of ownership. When you pay for something with money you actually have, you own that item completely, and you own yourself completely. So, where do you go from here? You have the knowledge, you have the plan. The only variable left is your will. Are you going to let fear keep you enslaved? Or are you going to look in the mirror and decide, today is the day. Today I stop being a victim of the system and start being the master of my destiny. I've told you my story. I've shown you what's behind the curtain of the machine designed to eat you alive. Now it's up to you. If you're tired of the anxiety, if you're tired of the lies, if you're ready to fight, I need you to do something right now. Subscribe to this channel. Hit the like button so another person who is drowning can find this life raft. And please, leave a comment below. Tell me your debt number if you have the courage to write it. It makes it real. Or tell me why you disagree with me. I want to read it. Let's start this conversation. Let's break the silence. Because we are in this together, and together we can break free.